Lower oil prices have eroded earnings at Australia's biggest oil and gas explorer. Oil Search's first-half profit fell 87%. Meantime, its smaller rival, Australian Worldwide Exploration, or better known as AWE, said the full-year earnings slipped 66%. Still, the majority of analysts rate Oil Search and AWE a buy. 10 out of 12 are bullish on Oil Search, and the average target price is almost $7 Australian dollars, and that assumes a potential upside of about 13% of the stock. Now, 9 out of 15 analysts say buy AWE's stock, with an even larger upside potential of more than 20% returns. Well, for more on the companies, let's head down to Sydney now, and AWE's Managing Director Bruce Wood joins us on the line for more. Bruce, let's talk about your latest earnings. First off, net profit fell about 66%, as we mentioned, on those lower oil prices. Also, a shutdown at one of your gas projects. There's not a lot of positive news, I would have to say. What is there to get investors excited about these days?
Well, I think, Susan, that in AWE we flagged that we were expecting lower earnings, and everyone knows the effect of lower oil prices. Look, I think the AWE has taken the opportunity to lay very strong foundations for growth, and we have a very large exploration program underway. And that exploration program has two arms. It has a near field, lower risk arm, and it has a wildcat, higher potential arm. And both of those programs have now started, and we see that as the potential to deliver very high returns to shareholders.
Now, Bruce, I saw some interesting dynamics with the sales falling despite the lower oil and gas prices that we saw in the first half. Why was that the case?
The sales falling?
Yeah, sales falling despite lower oil and gas prices. In those situations, don't sales usually rise?
Yeah, I think that what we're really seeing in AWE is we brought on the very successful Tui development in New Zealand, and that has been a spectacular performance, and it hosted AWE production and sales in the last 2 years to record levels. And now, as we see the natural decline of the Tui field, we are seeing these natural declines occurring. And when put together with lower oil prices, that's the effect we're seeing.
Okay, well, Bruce, as I mentioned, analysts are expecting your shares to rise to maybe $3.14 Australian over the next 12 months. That's a 20% gain from its current levels right now. So my question to you is, what do you think would likely be the catalyst for your share price?
I think the catalyst will be success in our blend program. We're spending in this financial year alone 175 million Australian dollars in exploration, and that is one of the largest exploration programs of any Australian company at the moment. AWE has historically been a very successful exploration company. We have, over the life of the history of the company, enjoyed a 25% success rate, and certainly we would expect that the market would give us great support as if we were to announce a success in that program.
Hey, Bruce, let me just ask you one more question, though. As we mentioned, net profit fell 66% in the quarter. How do you see sales and revenue playing out for the rest of this year? A pickup of sorts?
Yes, we would see, overall, we see the shorter-term oil prices in the area they are at the moment. We don't see any immediate pickups occurring in oil prices. We've given new guidance for the company of 400 million Australian dollars for the year, based on current circumstances.
Okay, well, Bruce, one more question for you, because you have said that you expect more Chinese investment in Australian energy companies. China's biggest fund manager, China Asset Management, already owns a small stake in AWE. Have they shown any more interest in maybe raising their position, or are you in talks with any other Chinese companies?
We're not in talks with any Chinese companies, but we certainly are marketing the stock very extensively to Asian and potential Asian investors. We see in the company a growing Asian presence, in our shareholder list, and we certainly welcome that. And I will be very soon roadshowing the company again in Singapore, Hong Kong, which I do between 2 and 3 times per year.
Okay, Bruce, enjoy that trip. Bruce Wood of AWE.